On the podcast with us today is Chris Hake. Chris, welcome to the podcast.
Thanks, Dan. Appreciate it. Look forward to it.
Well, Chris, I'm really excited about this interview. We're going to be talking about this Greenway Apartments, which is a 32-unit apartment complex, and looking forward to diving into this. But before we do, I want you to give the listeners a little bit of a background about who you are and how you got into the multifamily space.
Yeah, well, Dan, I've been doing this since the late 90s, actually. Got kind of my teeth cut in rental properties back in the late 90s. And probably a matter of a couple years, I had purchased about 40 doors in my local area, Madison, Wisconsin. And, that took me over about a 5 to 7 year period. And then the market started shifting. I started having kids, and I actually then moved into some development projects and some more of the single family. And that's really carried me through past the crash. And when I really got the bug again was literally at the end of last year, 2018, about in November. And I started, seeing what the market was doing with single families. I do a lot of rehabbing and wholesaling. And at my age now, with my kids getting older, I didn't have the passive income that I wanted, and I knew I could go out and get it. And so I kind of got the bug in November and started really digging in, and yeah, now it's 8 months later, and I've got something under my belt and looking for number two.
That's awesome. Well, this is a pretty exciting story. 'Cause I know in the green room, we were talking a little bit about your process and progress and stuff. And one of my questions I asked you is do you feel like the MFI and Summit played a role in this acquisition?
Yeah, absolutely, 100%. And as I mentioned you briefly, whenever I get into anything real estate related, I initially will jump in to find out how can I shortcut my learning. And typically that's finding a coach or mentor and or any education or seminars, whatever it might be. And as I was doing my search online, I bumped into your name and Joe Fairless. And what I quickly learned after that was there was a 3-day summit coming up almost 45 days later. And I thought that was perfect. And by the time that rolled around in early January of this year, I bought my ticket and plugged in. I'd been doing a little direct mail marketing. I mean, I was literally just getting my list together and kind of getting ready to go. And I knew that I was just going to do enough marketing. If I got a few feelers out there, I could kind of get the ball rolling with marketing. But I knew I really wanted to wait for that event. Even though I've been in real estate a long time, the syndication part, looking for something larger than buying a duplex or a 4-unit, I knew there was going to be some more pieces to the puzzle that I wanted to make sure I did it right from the start. And so, as I was doing some marketing, I knew the summer was coming up, and I didn't have anything in play up until that point. And then, got a chance to sit in on, listen to all those great speakers and panels. And I literally buried myself in my office for 3 days, and I was excited.
Well, that's pretty cool. I like to be able to hear those stories. It always helps and encourages me as well as some of our team that, helps put those events on as well as all the speakers. So thank you for those kind words.
Yeah. Nope, it was good. And it's amazing. I didn't realize the magnitude of people out in the industry. And like I said, I've been investing for over 20 years, and I probably recognize 2 names out of 50 speakers. And so that really, kind of pulled the curtain back to what's possible and all the great, success stories and brain trusts out there who are doing this right now. And then that's who I want to learn from.
Awesome. Well, let's dive into this 32-unit complex. And where is this Greenway Apartments located? Is it in Madison as well?
Yeah, well, it's actually in Fitchburg, Wisconsin, but it's basically a sister to Madison. So right inside the Madison area.
Okay, great. So let's start off by having you discuss with us how you actually located and found this deal.
Well, as part of the summit, as I mentioned, I went to the summit with the intent to gain knowledge and understanding, but also to walk away with a plan that I could take action immediately. And so when I left the summit after 3 days, I had identified 4 different speakers that really, I think I kind of gravitated to based on what they were talking about, their experience, all the stuff they were doing. And then I talked to a couple of them, but I narrowed it down to one person And then I actually signed up for an event that he had, which he was offering to create a pitch book, which I heard a lot of the speakers talking about. And I knew that was going to be an important piece to really go out and identify, my purpose and what I was going to be doing in the market to find this property, and then to be able to have a good conversation and very concise with the pitch book being able to do the talking. And so I ended up getting the pitch book, putting that together, and literally during that time, like I said, I'd been meeting with a few people, sending out some direct mail marketing, kind of letting anyone and everyone know what I'm looking for. And I just so happened to connect with a buddy of mine. I've known him for 20 years. He happens to be a realtor as well. And we just met for coffee, and we were talking about different stuff. And I said, hey, by the way, here's what I'm doing now, when he asked me. And after that coffee meeting, 3 days later, he gave me a call and said, hey, you're never going to believe it. I've got an opportunity. And I said, my first question was, is it on the market? Because anything on the market in our market is typically you're fighting against the person who's going to pay the most, and it's probably not a great deal because we have a very tight market. And so he said, nope, it's off market. It's a client I've worked with for years. And he just made mention, he goes, the best news, it's only 2 blocks from your office. And I thought, wow, that is fantastic. And I said, great, when can we meet? So we met the next day. I met with the seller. We got together. He actually showed me through 4 of the units, which I was surprised, but he had a good relationship with the gentleman who brought me the deal. And we went through the 4 units. I knew when I got out in the parking lot, I had talked to my buddy and said, I need to write an offer on this. And so within 24 hours, we had put an offer together, met with him, the seller, for coffee, I think a day later, a day or two maybe later. And come to find out at that time, I was doing battle with what I like to call Goliath. So one of the big guys in town who's got big property management company, and they've got tons of other properties they're working on. And so long story short, I was able to negotiate well enough with the seller face-to-face, eyeball to eyeball, and we got it accepted. And, there wasn't a lot of haggling. It actually went pretty smooth, but I think the relationship is what really set the stage for it, is that the gentleman who brought it to me, he and I had a relationship, but he also had a relationship with the seller. And the seller owned the property for 12 years. He had 3 complexes, 68 years old, and this was the first one to go because it was a little rougher. And so it actually worked out good because it was definitely a value-add BC type property.
So it kind of goes back to making sure that you have that the relationships that you already have in a market, like that friend that you had, that you let them know what you're looking for, because once you start to get it out there, people are going to start looking and keeping their eyes and ears open for it.
Absolutely. I have a RIA that I have here in Madison, and when I teach and train, I talk about that all the time. That is your greatest asset. You've got to let people know what you do, because the day someone comes to you and a deal slips through, you're going to ask that person, why didn't you think of me? And they're going to say, well, I didn't really kind of sort of know what you did. And you're thinking, well, I've been doing this for 10 years. How could you not know? Well, that happens all the time. And so I'm one that just is continually trying to remind people all the time, hey, here's what I'm doing, or here's what I'm doing differently. And so that timing is everything, right? That worked out well.
So how many rounds of offers did you go through with this one? Because, obviously it was off market, but you kind of were competing with that other, kind of bigger player in the game too.
Yeah, that was a tough one, because the numbers, the other party was definitely willing to play more. And when I went to the table and met with the seller with my offer written, locked in stone, he told me that he had another offer on the table, which up to that point, we thought we were the only game that he was considering. And after asking enough questions to try to understand where I fit in, I learned quickly that the other offer was a letter of intent that wasn't in writing. So that just told me they were fishing because they felt they had the one across the street. They own the exact 216 units across the street. So I think they felt maybe because of their size or because of what they've been doing in our market that, the letter of intent was kind of a gauge for them. And I've learned long ago that if you're that close and you're serious, put it in writing, because I think that hurt them and it got me over the threshold. Because at the end of the day, I just talked to the seller as, mom and pop, because that was me and that was him. And, I think I appealed to that side of him. I really made it more personal, because in the negotiation side, the other people were willing to pay more money at the end of the day. So I wasn't going to try to chase that up. And I believe that I could take the relationship and strengthen it through, really appealing to that sense of, he's been doing this kind of on his own, just, have a couple properties. And that's kind of what I've done my whole life. I'm not, a 1,000-unit player. And I think he felt comfortable with that. And I think, as we know in sales, if people know you and trust you and you can build that relationship, you have an edge. And I felt that gave me the edge, and it tipped me over the top. And I know the other people were going to pay several $100,000 more. So it worked out really well, and I just kind of stuck with it. The only opportunity I really had besides price was to work the relationship side, and that's what I did.
So does this seller that you bought it from, do they also have other assets in the market, or was this their only one?
No, he's got two more, and 2 different cities, within Madison, but kind of a close proximity. So I already know that the other ones he's going to be probably selling off here in the next couple of years, and I expect to be the first person he calls. And I'm going to make sure of that, because I already know that I've already done all the legwork to get the first one, and it was a smooth transaction. He got what he wanted, and I got what I wanted. We worked together on it, so it worked out real well.
Do you think there's an opportunity to buy the property across the street that has the other 32 units from that other person who was the bigger player?
No, I don't, and here's why. They bought that property probably 18 months ago, and it was severely distressed. Had a lot of work that needed to be done, and they ended up buying that property for only a couple $100,000 less than I bought mine 18 months later. But the amount of money they had to put into it, which is probably around 750 grand, I'm probably going to put 250 into mine. And they basically set the benchmark and the comparable for my market, or my area, I should say, where we got our appraisal, because it's the identical 2 buildings to mine, and they've set the bar really high. So I had a beautiful comp coming in. I probably couldn't have scripted it any better. Their rents were already super high market, and they had, fixed the property, and they were 100% occupied. And so, everything I'm basing mine off of from a rent standpoint and updating, I've been able to use them as kind of my mark. And it's given me a pretty good position, and especially looking forward to, exit from a refinance standpoint of what I want to do coming down the road here.
So what was the actual purchase price on this one?
This was $1.8 million.
So $1.8 million. And how much equity was brought in?
Equity, I raised $650,000.
And was there any earnest money deposit that had to be put down, or anything would go hard day one or anything like that?
Nothing hard. I put down 10 grand. That was enough to secure it. So not a huge amount, but enough to secure it. And it wasn't hard, actually.
Okay. So that's actually very reasonable. And that was just basically, it didn't even go hard after due diligence or anything. It just kind of stayed there, or?
No, I don't believe it did, Dan. No.
Well, thankfully I didn't have to worry about it, because you got the deal closed. So that actually worked out pretty well.
Right.
So how did you end up, well, before we get into that, I want to ask you, during the due diligence process on this property, did anything come up that was kind of out of the ordinary?
Well, I don't know about your market, but from an electric system standpoint, everything in the building was Federal Pacific. And I know in our area, the FPE panels, we had the 2 main panels in each basement, and then we had the main, or not the main, but the individual unit boxes, and everything was at Federal Pacific. And so from an insurance standpoint, that can be a tough hurdle if you don't replace that or take care of it because of their sometimes just combusting and creating fires. So we were able to find an insurance company. I tried to leverage that a little bit because he knew that was something too. It's something identified right away because we have that. It's pretty common around here. And I know it's something too that has to be dealt with and replaced. So we were able to find an insurance company that worked with us. We got it replaced within the first 3 weeks after closing. And so the insurance company was good with that. And so it worked out well. But other than that, due diligence wise, the great thing about this property was it was distressed, not from the standpoint of the building as much as the landlord, as the owner. And I think just his age, I think he was self-managing. He had a handyman who just recently had a heart attack. And so he was on maybe quarter time or half time, and another gentleman that did some handiwork for him, which essentially were his property management crew. And so the real distress was in, I think, his ability to effectively manage it. And the rents were pretty much at the lowest area in my neighborhood area where the other properties are. So, there really wasn't, from a due diligence standpoint, anything that popped up that was a big concern other than the things we identified up front.
So what were the rents before you acquired it? What were the rents?
So there was a 16 one-bedroom and 16 two-bedroom. The one-bedroom were averaging about, $650. And the two bedrooms were averaging about $750. Some lower, some higher, but most of them actually a little bit lower. So, and then for our market in that kind of BC area, the ones across the street, I mentioned the other company who had the two identical 16 units, their one bedrooms were at $825 to $850, and their two bedrooms were $945 to $955. Same identical units. And
what were your projections to get it to that same level?
Actually, no. I was trying to be conservative just on my initial analysis. And so without jumping right to the top, I analyzed everything, ran it the first 12 months at $799 for the one bed and $899 for the two bed. Keep me a little bit below the top end. I've got room to move, but I wanted to, my strategy, and I can get to that in a minute, was, over the next 12 to 15, 18 months of what I was trying to accomplish.
So what are you going to be doing to the interiors of these units to get that increase in that rent?
Well, what we've done is originally the plan, the units were in pretty good shape. The landlord had already taken out, the seller, I should say, took out carpet out of the main living area of 16 of the 32 units within the last couple of years. So he put all the LVT, luxury vinyl tile, and in replace of carpet, which was a fantastic idea. It'll definitely last longer, and it gave the units a much better look and feel to them. Kitchens were in good shape. I mean, we can do some countertops here and there, and some of the appliances, half of them were newer. So we had buffered. We had only allocated maybe $5,500 per unit across the board from the upgrades. And the management company that I hired is actually a good friend of mine. He owns and manages a lot of units in the area that are very similar. And, the plan we came up with was, he was going to, because our vacancy rate right now is maybe 2%. And so the market's pretty strong for the rentals. And he said, we just kind of look at them one by one as they become vacant or turn over. Take a look at what needs to be done, get them cleaned up, paint and at a minimum, and maybe some new flooring. But some of them, we weren't gutting them. I only had one out of 32 that was a serious hoarder, top to bottom, inside and out. And that one we'll have to do a major overhaul on. But all in all, the plan was just to replace as needed, get it really clean, kind of take all the experience that our management company has with working with folks in those neighborhoods and in this market. And so far that's worked out pretty well. We've been able to, I think, renew almost a quarter of the units within the first, 6 weeks here, without doing anything. One of them, we moved over to one of the units that we cleaned up, carpeted, put some flooring in, and I think a new kitchen cabinets, but it's been light. It's been actually better than I anticipated so far.
And with that with those renewals, are you getting that bump all the way to the projections to the $799 and $899, or just a little bit of a bump?
No, $799, $899. So I told them going in, I said, I want to make sure these numbers are realistic, and they agreed. They said, yep, and they had been through all the units, and I said, let's make those our standard. And if we run into problems and we're having week 2, 3, 4 weeks and things aren't getting rented, then we'll assess it. But so far it's been like clockwork. Knock on wood, but we're also in the summer, which are the good months for turnover. And the $799, $899 have been solid.
That's great, because even not being able to have to worry about putting a lot of CapEx in or anything like that, and just being able to get those renewals of those bumps tells you that they were way under market. Because especially if across the street, very similar units in poorer conditions, are getting higher rents, then you definitely can easily do that, because the tenants know that they're getting a good deal and they can't go anywhere else anyway and get that kind of rent.
Well, that's it too. Because when I called in my due diligence, I called, I think, 7 or 8 of the properties directly, my competition right around us, and we were the lowest one, which was obviously, as someone buying, that's what you want. And so we had the most ability to move without even going all the way up to market, which gave us a buffer to play with. And in a good day, if things continue to grow, then we've got room to move up, and we're still a little bit below market. So it is hitting all our numbers and projections, so that's good.
So you mentioned the property management being a friend of yours. Is it a actual company, or is it just an individual, or how are you setting up the property management on this property?
No, this is a very seasoned gentleman. He's been in this business for probably 15 years, kind of cut his teeth working, with a mentor who owned properties, and he basically just worked for him for about 10 years, learning the ropes. And then when he got kind of his first property, I think it was about 5-6 years ago, he basically, in a 3-4 year period, I think he's up to 700 units or so. And he created a management company because he now had the skill and ability, learning from someone very seasoned, how to not only acquire property, but also to manage it. And so he's created a management company, and very much a value add type buyer as well. So it worked out good. I've known the gentleman for, several years, and, I felt real comfortable with him, their management style and his ability to understand the needs of what my building is going to require.
So let's pivot a little bit here and talk about the financing on this one. How did you end up financing this project?
Oh boy, that's where the story gets good. So it was interesting because when I went to your 3-day summit, or when I say went, when I participated, one of the things that really struck me, because my background is working single family market. So, buying a $200,000 or $300,000 house, I can go raise private money for that, no problem. Or I can get partial bank financing at a low interest rate, and then maybe some private money for some rehab. And so that I'd been accustomed to doing for a decade or so. And when it came to looking at the bigger units, not even knowing what I would find, what I got from a lot of your speakers and yourself and just listening to you guys was, that financing piece that was going to probably require more investors, the limited partners at a minimum. And I would probably need some support from an additional co-guarantor, something on the GP side, because I probably was not going to be able to take down a couple $1 million loan myself at this point. And so when I came out of the 3-day, I started immediately kind of thinking about, all right, single family, I need one private lender. A big multifamily, I'm going to need maybe 4, 5, 6, 8, 10 of them. And so I started talking to banks and started having lunches with commercial side, which I hadn't done a lot of. And I quickly found out that, it was a different animal. And there were different things I needed to be not so much concerned with, but I needed to understand. Mm-hmm. And again, learning what you guys were teaching in the summit and all the different panels was I kind of came away going, all right, I'm probably going to need to find investors that I'm paying a pref of maybe 8%, 9%, and they're going to get equity of maybe 70 or 80%-ish for the project. And then as the GP, I'll retain 20, 30%, maybe with a co-guarantor. And that was kind of what I heard over and over and over. And so when I started meeting and talking to people, my SEC attorney and some of the different banks, and I started running all the numbers, I just couldn't get it out of my head that the numbers were just tight. I felt like I was going to be doing all this work and creating this opportunity and making very, very little. And maybe it's just a different mindset of where I've come from, but I kept thinking back to, well, why do I have to do it that way? Why do I have to give 70 or 80% away? And some of the different people that are on my advisory board that I've selected to help me that have done a lot of the deals, I had those same conversations with them. And as I was talking to banks, I started really proposing to them a different model that I was trying to accomplish. And I got shot down one after the other after the other. And that model was, hey, I'm not going to put any money in this. I want to keep all the equity except maybe for 10%. And all my investors, my private money investors, are only going to be debt investors, and I'm not going to be providing any equity. And that was so foreign to people that I was talking to from more of a multifamily syndicator or a bigger deal size. And for me, it just seemed normal because that's what I'd been doing. And so I wasn't kind of connecting the dots yet. And so I kept going down that road, talking to the banks, and the banks are like, that's not going to pass. You can't do that. That's not going to structure-wise work. You got to have skin in the game. You've got to have X, Y, and Z. And so I just kept meeting with banks. And I finally met with a bank, and I sent them all my spreadsheets. I told them what the debt structure was going to be. I needed 80% from the bank, and I was going to bring another 650 to cover the downstroke and the repairs and, the other fees associated with closing. And, I gave that. I still remember this conversation. It was great because I gave it all. I was working with the vice president of a bank, and, he went through everything and he said, looks good. And a couple of days later, he called me and he said, the branch or market president, he would like to meet with us together at our office. Can you come over? And I said, yeah, sure, that'd be great. And I came over and met with him. We sat down, and the president was across the table, and he said, I just have to be honest with you. He said, I don't understand what you're doing because it's not normal. And I said, okay. And I said, well, let me explain it. I said, because they're looking at it saying, the people you're bringing in, they're not getting any equity, and you're not bringing in any money. He goes, I just want to make sure I understand that. And I said, yes, that's accurate. And I said, is that a problem? And he said, well, actually, he goes, it's, I've done a lot of these deals before and worked with other investors. He said, but I've never had anyone bring one like that. And I said, well, do the numbers not work? Because I already knew they did. The debt coverage ratio was what they told me they needed. And he said, nope, the debt coverage ratio works. I said, okay, then what's the problem? He said, I don't know, but it's just different. And so it was a really interesting conversation. And finally, a half hour later, we went through the whole thing again. And he said, I got to tell you, he goes, this is really great. He goes, I love what you're doing. And I said, so are we good? Can we go forward? And he said, yeah, I think we can. And so, I had to go get 2 co-guarantors that I gave an equity piece to. And that's, again, I learned that from you guys of needing somebody else to be able to qualify for the bank to be bankable. And I did that. And so I ended up bringing 2 co-guarantors in who brought in their balance sheet along with mine, and they got a % equity of the whole deal. And then my 650, I brought in 5 private investors and paid them 8% simple interest and no equity, because frankly, those same people are folks that I've been raising private money from on single family deals for years and years and years. And equity's never been in the cards. That's just always been interest. And so I just did the same thing, and we put the deal together and got it done.
And so what's the plan for repaying those investors?
Yeah. So as we run through the numbers, paying the 8%, is just being paid on a annual basis. I think we had some smaller numbers in there to get out of the gate for the first year, just depending on how much we had to, put into the property. I think we're going to be low on that, meaning we borrowed enough to cover. But the plan is in the first 12 to 18 months, based on what I'm hearing and seeing, and with the elections coming and just the market the way it is right now, I think our rates and our market is going to remain pretty stable for another 12, 15 months. I think we're going to get to the election and we'll see what happens. But knowing that with my property management company, if we can increase all our rents up to the $7.99, $8.99, or even get past the first round into the very beginning of the second round, meaning next summer, to start even kicking those up, maybe another $20 and still be under market, my net operating income will increase the value of the property based on our market cap rate enough to probably take all the investors out within the first 18 months. And then I'll pay them off, pay their interest, and they'll be paid off in full. And then we'll go do another deal together. So right now the numbers are looking like we should be able to achieve that based on where, we're seeing things. And if I'm a little short, then I've got one of the investors who will stay in the deal for another year. And then, I'll just pay him forward the 8% until that time when we can pay him out.
That's great. That's awesome. Well, this goes to show you, Chris, that, it's all about trying to know who your market audience is, and those are your investors. And you're right, if you have investors that you've been working with over the years in a different type of industry that are used to be on the debt side and just getting a simple interest of that 8%, 10%, whatever that might be, some form of like a hard money loan or whatever, then I think that's great. That's a great way to kind of shift and pivot, as long as, like you said, you continue to find that particular lender or that bank that's willing to work with you. Yeah.
And the great thing is now the bank that, I negotiated to do all this, and it still took some maneuvering and negotiating with moving my bank to my current bank that I've been with for 15 years to their bank and all my accounts. And that was a concession I made to get some other things that I was looking to get from them on that negotiating side to get the package put together. But, they're excited to do the next deal. And so it's a local bank. They've got 3-4 branches, but they're hungry for it in our market. That small to mid-size, I've always found, at least at this level, again, if I have 100 unit, that might be a different conversation. But at this level, the smaller mid-sized banks have been pretty hungry and, willing to work and aggressive in the market the last few years here. So I'm going to keep trying to ride that and see if I can, keep bringing deals to them and keep that relationship going.
That's exciting. That's pretty cool. I really like that strategy, what you did there, Chris. So kudos to you for going around and finding the lender that'll support it. Cause I know a lot of people would go to those first 2 or 3 and just get discouraged and just kind of go back to the way they were taught or whatever. But what you did is just continue to pursue until you found that right person.
Yeah, no, it was, it's been quite a learning experience, and it just goes to show too. And, you said it perfect. I hear so many people that tell me, I went to the bank and they said no, or I talked to an attorney, he said, I can't do it that way. Or I talked to a friend who has properties and he goes, well, this way works and that way doesn't. And I just keep encouraging people, go talk to 10 of those people, because somebody will. And you just got to find the right person who is willing to do what you want to do, or at least in that vein, do what you're trying to propose to them. As long as it's, honest, legal, and ethical, then great. There's a lot of creative ways to get things done.
So can you think of anything else that of different types of issues or problems or just different things that might have been interesting that came out through the entire process of this property that we might not have covered yet?
I guess I would get back to the 3-day summit and my experience with that, because the gentleman that I had tied in with to help me create my pitch book or my pitch deck, gosh, as long as I've been in this business, I've never had something like that. And now that I have it, I feel so empowered to do things differently because of that tool. And, it was something that it seems so simple to do or easy to do, but it's not simple. I mean, it took a lot of thought and a lot of research, but now that I have it, it's going to be so much easier to go out for round 2 or round 3 or whatever the next deal is, to go out and take this document and everything in it and be able to sit down with someone for a cup of coffee and to be able to have a very focused conversation about exactly what I'm doing, who my team is, what I'm looking for, and what that means to them to be a part of that. And so I never would have probably, well, I don't want to say never, but up until that point, I had never heard of a pitch deck or a pitch book, at least not in those terms. And so that was something that, boy, I'd recommend to anybody. I don't know how many people do that kind of stuff. Maybe all you guys have it, and I'm the first one or the new guy going, wow, that's cool. But I thought it was such a great tool, and I appreciate having the opportunity to find you guys and to have enough people talk about it and go, what the heck is that? And yes, I need one. So that was real good. Other things that came up from that, I think again was the rejection that I kept getting, because as I was going forward and thinking in my head, the model is I need to be able to offer 70, 80% for the equity investors. And if I could get so lucky as to find one person to bring all the 650 and their bank statement, I found a couple of those guys, and I actually went that route, Dan. And what I found was, after spending literally countless Sunday mornings meeting in my office, going over spreadsheets for 2 hours, and then that person meeting with their attorney. And what came from that was the attorney of my, let's just say, the gentleman who was going to bankroll the whole thing. And I thought that'd be great to have one partner. He's not only in my GP, but he brings all the money to the table for the LP side. But his attorney was basically saying, this is too much risk, don't do it. Have him give you 90% and we'll give him a 10% fee for finding it for us. And that really hit me, because my buddy, who's a friend of mine, and he's been doing very well for himself, he goes, are you a strong enough person? He goes, can I send you the email from our attorney? And he goes, I want you to read it. And I said, yeah, man, send it. And after I read it, I thought, it just really hit me. Like, I think that would have knocked a lot of people off the block. And all I could think was, there's no way I found a deal like this, however I found it, or anybody that found it, and to give it away for 10%. Now, 20 years ago, Dan, I might have done that. And I might have looked at it and said, man, I could get a couple $100,000 just for giving it away. Just walk away and take my 150 or 200 grand. But that wasn't the play. This play, when I started multifamily, was I want long-term passive investment that I can have for my kids and down the road. And so, not that it's never tempting to have someone take it off your hands without doing any work and getting it quick, but I've been doing that for 20 years. So this was the direction I wanted to go. So that was another part of that learning experience of, just even though I got shot down multiple times, I knew that if I just kept looking, I could find somebody. So at the end of the day, don't get deterred. Find people who can help you get to where you want to go and ask questions.
So I have 2 final questions for you, Chris. They're kind of contrasting questions. So the first one is, what did you find that was easier during the entire process that you thought might have been a little bit harder?
What did I find that would be easier? Or that was easier than I thought? I raised that money, that 650, probably in 5-6 days. I thought it would take longer. I'm used to calling somebody up and having them write me a whatever, amount for 150 grand to go buy a rehab. But to find a bunch of those all together at the same time and pay them a lesser interest rate than I was paying before, I thought that would be tougher. And that was actually easier. So it was out there, but I think I had all the pieces together. I was prepared, and I had a story and a plan, and I had all the the supporting documents to get folks buy-in, and years of relationships that I've cultivated.
And kind of contrasting that, what did you find was harder than expected during the entire process?
The bank side.
I was going to say.
Yeah, working with the banks. I have a new respect for that level of it, and I understand it now better. And I definitely would be prepared. I know I could have got a better rate, and I know I could have got better terms if it wasn't my first deal. I think I had to settle for. I mean, my rate was arguably still good. I mean, it was at 5.5%, but I know there's some of the banks that do a lot of multifamily in our area that just couldn't understand my model that I put together, that I was packaging, and they were probably 4.5%. I guess 1% of $1.5 million loan, it adds up pretty quick. So it would have been nicer to get that, but I just bank it I put it in the bank as experience for the next one. And now having a little bit of a track record and a deal that actually has been funded and I can show them is real and proven. So let's duplicate it over here and allow myself to possibly look at other, lenders or opportunities or options. And certainly, I'm going to go back to the bank that helped me with the first one because I appreciate them believing in what we did and they were excited about it as much as I was. But I think in this business, you always got to have multiple options out there for everything, whether it's, legal counsel, realtors, or banks.
Well, I think one of the things that you should do for sure is continue to find other banks that will do that same thing so that you can get them to start to compete for your business. That will hopefully, get you some better terms.
Yeah, no, great idea.
So, well, Chris, thank you so much. I love your energy. I love talking with you. Love your excitement around multifamily and all you're doing right now, and looking forward to continuing to follow you. How can somebody reach out to you if they have further questions for you, or maybe you want to join you on another deal?
Yeah, that'd be great. You can reach me at my email. It's Chris Hake, one word, at gmail.com. And people can call me direct if they want, 608-852-4403.
Awesome. Well, Chris, thank you so much again for being here, and looking forward to having you on another episode as you close some more deals.
Dan, it was a pleasure, and thank you so much. And I hope someone was able to take a nugget away from this.
Yes, I personally took nuggets away too, Chris. So thank you so much for providing all this information for us.
Thanks so much. Have a great week, Dan.